If you're a London session trader, but you keep getting stopped out before the real move, in this video, we'll fix that. You see, most traders enter too early because they don't understand the concept of London Q zone, and it's crazy. But in this video, I'll be showing you how banks set traps during London Open, and of course, how you can enter after the trap and not inside it. Let's go. All right, so I'll be introducing the concept of London Q zone right about now without wasting time. So what is London Q zone? The London Q zone is a specific time window where major institutions and of course banks manipulate price to grab liquidity before moving the market in the real direction. So most of the time within this time window is where manipulation occurs. So you must have experienced a situation where price just kicked you out and almost immediately starts to go your direction. So what you experienced there was just basically manipulation, and most of the time happens within the Q zone time window. We have different time windows of the day. We have different Q zones rather. We have London Q zone, we have Asian Q zone, we have New York Q zone. But for the purpose of this video, we'll be focusing on just London Q zone. So London Q zone overview. So London Q zone basically occurs, like I said earlier on, before major London session moves. All right, so this is where you get the most volatility after the manipulation. So what are the things to focus on within this time window? The first is to focus on liquidity grabs. This is very, very essential as far as this concept is concerned. You need to find possible areas where price would likely gravitate towards to spool for liquidity before going the opposite direction. So after that, you need to also observe structure shift and of course changing institutional order flow. So I would emphasize on this other concept, this last concept, when we get to the real charts moving forward. So the time of the day where you want to observe this manipulation and expansion and all of that is usually from 2:00 right to 5 a.m. instant time. All right, this is instant time. Okay, so the time when you want to observe for Nigerian time is 7 a.m. to 12 noon, right? Nigerian time or West African time, as the case may be. So it's just pretty much simple, right? And the key steps to observe or to follow, right, when trying to catch these moves are one, mark out your Asian range, your high and low. Ensure that you have marked the Asian range well marked and well observed. So the next is to watch out for liquidity sweeps. So liquidity sweeps can actually present themselves in different forms. It could be in form of relative equal highs, in form of relative equal lows. Sometimes when the Asian range did not really give you that consolidation, that clean consolidation market, like we would normally expect, sometimes you just want to watch out for clean highs and clean lows, relative equal highs and relative equal lows. Sorry. So the next step is to watch out for break of structure or opposing institutional reference points. By this, I mean that sometimes even when you don't have a clear break of structure here, but when you start to see price invalidate existing reference points and start to obey new reference points, then it simply means that we are most likely going to continue to push or expand towards the opposite direction. So I will explain this concept in clear details when we jump on the chart. So the last step is to enter either on your fair value gap or your order block or breaker block or just any institutional reference point that is being printed, right, once the manipulation has occurred. All right, so the currency pairs to trade basically within this time window are Euro USD, GBP USD, GBP JPY, and USD CAD. So right about now, we'll be jumping on charts to show you live examples of how this concept plays out. So here we go. So before we proceed, I'd like to also mention that this concept has to be traded in relation to the context of what the higher time frame is saying. All right, so it has to be traded in context with what your higher time frame price story is saying. All right, so essentially that means that you don't want to be in a bullish market and want to use this concept of Q zone to sell, it technically does not make any sense. And conversely, for buyers, technically it does not make any sense. So you must have done your proper top-down analysis from the daily time frame. You must have experienced, you must have observed your liquidity purge, change in state of delivery on your H4. So this concept is just to ensure that you get into the trade right at the right time, so that you don't constantly find yourself knowing where the market would go, but you're not part of the move when it finally happens. All right. So that being said, let us proceed. So charts. So I have two examples on this pair, and I think I have a few other examples on EURUSD. So this is the first example, right, for a London Q. Remember, starts from 2 a.m. to 5 a.m. Eastern time and 7 a.m. to 12 noon Nigerian time. So the first step is to observe where our Asian range, and Asian range, according to Eastern time, is from 10 p.m., which is 20:00 to I think around 12 or 11:45. So I'll just pick 12, right? And I'm picking 12 because that's usually when London opens as well, right? The London open price. So this is our range, as you can see, from this high to, so you pick the highest high of the range and you pick the lowest of the range, which is this. Boom. So when you pick the highest high of the range and you pick the lowest of the range, remember, within the time window where we want to find our entry is from where? From 2 a.m. then 2 a.m. instant time, which is from here, I guess. Yeah, from here. That is when you observe what you wait on the side and ensure that the liquidity rate happens. Price goes to support for liquidity, which is of course the Asian eye. So the purpose of highlighting the Asian eye and low is to expect a manipulation on those respective highs and lows, right? So if you're in a bearish market, apparently, just like I said, this is a bearish market, price is selling the whole time. So you want to expect the Asian eye to be rated, right, during that time window from 2 a.m. to 5 a.m., right? From 2 a.m. to 5 a.m. instant time. From 2 a.m. to 5 a.m. It's around the, yeah, to 5 a.m. instant time. So within this time window, basically, is when you want to expect this manipulation, and most of the time it happens. You see the volatility within this time window. All right, see how crazy this move is. So this is the move you want to expect. So once price goes to pull for this liquidity, wait for a change in state of delivery, like an order block, like I rightly said in while I was introducing the concept to you. So this is an order block, basically the last bullish candle before that took the eye before an expansion to the downside. So I like the opening price, of the order block. So this is where you find your entry, right? Yeah, you put your stops above the eye that manipulated the Asian eye. Then probably take your first profit here, and if you have more targets, you can decide to release it like about 1 to 2 risk to reward. Yeah, 1 to 2 risk to reward. And if you have more higher time frame draw to the downside, you can extend your TP. So essentially, the steps are quite simple. Ensure that the first thing you want to do once you get into the market is to mark out your Asian eye, wait for liquidity, change the state of delivery, all right, which is what we have here. This is an order block. It does not need to break a structure to confirm this is an order block. This is an order block. You only need this candle and another one, which is a bearish one, to engulf it, mark out the opening price, and you can possibly find other entries around here. But usually, just expect manipulation to happen within this time window from 2 to 5. All right, sometimes it happens very close to 5, right, close to when the Q zone is running to an end, right? So how you approach that is very simple. Just ensure that it has manipulated. So once it manipulates to that eye within that time zone, even if it happened around 5 a.m., right, and from 6 it starts to expand towards the opposite direction, if you find an adequate expansion towards the opposite direction, you can still decide to take it, right? But ensure that that time window sponsors the read on liquidity to the upside before expansion to the opposite direction. So that's pretty much it on this. Quite simple. And the next one is also for a bearish market, but apparently, like I said, price has been bearish, so we are only going to be selling. There's no buys. So what do we have here? From 10 a.m. I'm marking out my Asian range. From 10 a.m. that is 2 NT00 to what? To 23:30, or you can just simply say was the London Open, midnight open, right? So midnight open, we go to the, yeah, midnight open 00. Of course, there's also a simple idea you need to understand. When midnight opens, you buy when price manipulates to below midnight open in the expand. So it just basically correlates, or should I say, correlates with this whole concept of kill zone. So you mark out the high and what's the low of the range. This is the range from here to here is Asian range. Remember, Asian range, not Asian session. Asian session is wider than this. Asian session kind of extends a little bit beyond this, but your range is just from this high to this low. So this is the high during the Q zone, which is from what time? From 2 a.m. right? 2 a.m. Eastern time to what? To 5 a.m. So that is when you want to expect your manipulation. And as you can see, this is the high. This is the high. I don't want to draw too many lines on my chart, so that's why I didn't do that earlier on. So this is the high, or Asian. I remember we're in the bearish market. Sorry. So this range, as you can see, sponsored what the up move to raid this relative equal highs here during that time window. As you can see, it successfully raided it till 5 a.m. and after 5 a.m. you can notice the expansion towards the opposite direction. Okay, so this is all we want to see, right? A fake move during this time window, that is your manipulation. So once that happens, you wait for a change in state of delivery, right? Which is this, your order block. All right, so this is the last up close candle. So this is the this is the last up close candle before a sell that's sold to close below the opening price. So your entry would be here, and of course, remember, it has to be in context to what the higher time frame narrative is saying. Eyes will be there. Then of course you target what, if first target should be relative your Asian low, then you can target as many lows as you want to, depending on your higher time frame narrative. So pretty much easy, right? No complications, nothing too complex. Just ensure that you're right on time. You observe your Asian highs, Asian low, wait for price to spool for liquidity within that time window, expect an expansion towards the opposite direction, they enter at what the nearest reference point. So this is your new reference point now. This is a bearish order block. All right, and this is what I mean by institutional reference point. This is a bearish order block. Sometimes you see a breaker block, which is also a zone where you can either buy or sell from, depending on the market narrative at the point in time. So let's quickly go to EURUSD and I'll show you a few more examples on there. Remember, we do not trade the spike, we only trade after the spike. So you ensure that you wait for the manipulation, right, to have taken place before you get in. So yeah, same idea here. Let me take this off. From 10 is 23, sorry, 20 rather, 20 o'clock. So let's just say 12, right? So this is like your range, right? You mark out the highest high within that range and the lowest low within the range. This is your lowest low within the range, I believe. So then from 2 a.m. right to 5, that is when you want to find your entry. That is when you want to expect price to go for liquidity and trade to the opposite direction, right? So from 2 a.m. as you can see, let me bring this back here. I don't want to leave this line here because it's blocking this line. It's blocking me from seeing the line. So let me just use this instead. From 2 a.m. so expect the manipulation to 5 a.m. right? From 2 a.m. to 5 a.m. As you can see, right? So sometimes we have some kind of pre-session manipulation, okay, but where you want to expect price to gravitate towards the opposite direction is within that time window, right? Expect the manipulation to happen within the time window, sometimes a little bit, perhaps some few minutes before the manipulation, but usually when you want to expect price to move towards the opposite direction after it has raided the Asian eye is during the Q zone, which is from 2 to 5 a.m. So as you can see, where is the last up close candle before a change of delivery was formed? This, right? This one here. This is your order block, right? This is your order block. Or you can start to also pick these two candles, which is better. These two up close candles, right? Up close candles. Then this candle engulfed the two bullish candles to the downside, as you can see apparently. So this is your within the Q zone. You put your stops here, then you target your nearest draw liquidity or something, then there you have it. So usually just target like 20 to 30 pips, so probably 2 hours to 3 hours, then you're good for the day, right? So very easy, no complications. Ensure that you are very patient, right? It is not a signal, right? It's a logic that works most of the time, and you don't want to go into the market trying to find setups that are not there. If it's not happening, then you want to stay on the side and do nothing. Okay, mark out your high and low, and expect the manipulation to happen and get in once you have a change in of delivery. That's your institutional reference point has been validated. Okay, then you of course move your stops to break even once you have a break of structure or shift the market structure, and from there you can target whatever region you want to target based on your higher time frame narrative. And the last one will be here. All right, this is a buy setup, same concept but just a buy in this context. So from 20 o'clock is your Asian range. It's towards 12. This is your Asian range. You mark out the high and the what? The low. This is the low, right? This is the low of that range. This is the low. Okay, so once the low has been established, the next is to what? Observe your two. This is the low. Let me mark this space clearly. Ensure that you mark out the exact low of that range. It's very, very critical, very, very essential. And this is the high, right? So the ones that has been clearly marked out, you want to wait for 2 a.m. right? 2 a.m. candle to manipulate down. So as you can see, yeah, manipulation. Moment it manipulated, what happened? Expanded, gave us this, right? So what is your order block? Look at this last down close candle, and we have what? Series of up close candles. This is your order block, right? And the moment price traded and closed above the order block, that is where you take your entry from. Boom, put your stops below the low. Target here as your first take profit, which is Asian eye, or probably move your stops here to break even once price tags the Asian eye, and boom. As you can see, this is what we have. This one, I think this one happened today. Yeah, Q zone, London Q zone. All right. So if you perhaps entered around here because you probably saw an order block here, you see price just prematurely stopped out. People bought early and eventually gave them the right words. Gave the right move after majority of them have been stopped out. So if you consider trading just order blocks without the context of what a Q zone is, then most of the time you get stopped out prematurely and you end up not joining the remove. Can you see this order block failed? Why? Because it is not within the time zone, sorry, the time window for Q zone. Easy peasy, no complications, right? So you don't want to take my words for it. You can just go on your charts and observe same patterns. All right, and like I said earlier on, you do not want to trade this concept in isolation. It has to be in context to what the higher time frame narrative is saying. You have to be in a bullish market for you to be trading a London Q zone bullish setup. It is very easy peasy, right? No complications. So you do not need to trade it every day, just like I earlier said. So if this breakdown has helped you to understand the kill zone better, right, I want you to subscribe so that you don't miss out on my next setup. So I'll be uploading a video on how to mark out certain ranges to expect price to raid, right, even if your Asian range is not clearly defined. All right, so I'll be sharing of course on my Telegram channel, and I'll also be uploading here on YouTube. So ensure that you subscribe and turn on post notifications so that you don't miss out on my next video. Okay, so until then, I would see you